Good evening, everyone. My name is Michael Sabo, Senior Market Strategist with RJO Futures, a StoneX company. And we want to welcome you to our fourth webinar here in the series that we've produced here with Agris Academy. This one is Economic Threats to the Farm and Defensive Strategies for 2026. I want to welcome Jeff and Mike with Agris Academy. Myself, I've been with RJO Futures here or excuse me, in the industry here for about 30 years now. Over at RJO for going on 15 years, and so we've partnered with Agris Academy here to do these educational bits here and for producers to help give you guys the tools and resources and the knowledge that you need to make confident decisions here on the farm here. With that, I'm going to turn it over here to Jeff with Agris Academy, and then we'll start diving right into today's presentation.
Yeah, good evening, everyone. Jeff Kazin. I'm a co-founder of Agris Academy with Mike Ralston, who's also on with us tonight. I did 30 years in the grain trade, the global grain trade, almost all of that with Cargill, trading everything from your corn, soybean, wheat, all the way to fish meal and fish oil and lysine and things like that. And Mike and I started this company a little over 3 years ago, focused on education. Education is our core business. We also do some farm management consulting. It just kind of happens that way. And we've really come to enjoy that. And we're delighted to be here tonight, sponsored here by RJO StoneX. And let Mike introduce himself.
Yeah, Mike Ralston, also co-founder there with Jeff, as he already mentioned. I spent about 19 years with Cargill, doing a lot of very similar things that Jeff did, both here and abroad. One thing Jeff failed to mention is we were also in the merger and acquisition and corporate strategy group with Cargill as well. I also spent some time on ventures at the end, and that kind of got me the bug in the venture space. And then for about a dozen years after that, I was either in some form of ag tech, venture capital work, or in small ag tech oriented startups myself. And just want to echo what Jeff said. Thanks to RJO and StoneX to have this platform. It's our fourth iteration, and it's really enjoyable, and we love to teach and pass the good word. So, without further ado, we'll get into it. And this one, we don't want it to sound too doomerish, but it's a hot topic. And Jeff and I off to the side and long drives together or moments when we're working together talk a lot about these topics. So we wanted to pass on some of our synthesized thoughts that have been sort of bouncing around in our heads for years now, especially that now some of these situations are staring us in the face. And that's what tonight's about to get a little deeper into it.
Just before we get too far, you can ask questions in the live. If you're in here live, just bring your cursor down to the bottom of the screen and click on that little chat icon, and you can type in questions if you have questions as we go. We'll try to watch that as we go and answer them. It's one of the benefits of being here live this evening.
Yeah, no such thing as a bad question, folks. We really like the interaction, so don't be afraid to hit us with it. The disclaimer here. And we talked a little bit about this, but we just want to underscore the fact that we teach, we educate. We are not on the brokerage side or advisory side, though we do greatly appreciate this relationship that we have with RJO and StoneX. And yeah, our mission in life is to bring our collective experience that we've had in physical commodity trading to the producer and level that playing field for you. And it's extremely rewarding going through this process to see the lights turn on and change the way, see producers change the way they approach risk and market their grain. So maybe Jeff, why don't you do this one? Because you and we bounced. What you don't know behind the scenes, folks, is we're kind of bouncing back on slides. And Jeff, I wrote something that sounded like the world was ending, and Jeff put a much more positive spin on it. So I'll
Yeah,
let
I
you.
wanted I wanted to kick off with something positive, just knowing my tendency, and obviously you're a very, you get to be a little wary, right, in this industry. But look, we're gonna have some good things happen in ag. We have been blessed with a whole bunch of things across North America over the last 10, 15 years. But obviously some of the things on the technology side, and particularly when I talk about healthcare and people living longer, We feed the world in a lot of in a lot of ways, in a lot of core ways on the commodity side. So, everybody talks, we used to talk about a super sharp, we're going to double the world's population. Now they're saying, maybe not. And now we're talking about, are we in a, are we, like a number of countries like Japan or South Korea, struggling to just, maintain population. So there is some, benefits to the healthcare and things that are going on there that could see that curve change. Um, we are going to also, as economies get better, we know this. There's a lot of data as people move up. As we brought, millions and millions of people have come out of poverty in the last 20 years. Their demand for protein increases, and that's good for demand for various feed grains around the world. And that's what we need, right? Because on the last point is, I've always been super proud to work in the ag sector. I see it on my own farm. The ag sector is so good at taking technology, incorporating it into the farming operations, driving value out of that technology. And one of the offsets of inflation is getting that productivity gain. And so we've got a lot of big things coming in productivity, robotics, AI. We've been working on genetics. Those will all help counter the inflation pressure that we have on the farm. And so, this sector, North America, really a great place. I think the data around the industry is fantastic for its efficiency gain.
Yeah, we'll talk about some trade-related things in this, but at the end of the day, nobody does this better and more efficiently than the North American producer, and we're confident that that will sustain itself and win over time, but not without some bumps along the way, which we'll talk about in the here and now. So what's happening is a bit of a macro issue that have sort of came about over the last handful of years. It's really squeezing the U.S. producer. So on the left-hand side, obviously the idea of inflation of late is kind of an old story, but it's definitely inflation is finding its way that in places that's often costing more on that part of the balance sheet and not necessarily delivering as much on the sell side. And with that, there's been some policies that we strongly believe have created a little bit of unique inflation specific to ag that's squeezing as well. And some things obviously in these trade war discussions, and we'll even pull up some legacy examples about how that's made us less competitive in the moment. All the while, our competitors globally are getting really good at what they do. And there's no more economic animal on earth than a farmer. So they'll respond to these price opportunities. So some of our competitors abroad have acted accordingly. And like we said, flattening population growth is definitely a bit of a, shall we say, not quite the demand function we thought we had, though there's, to Jeff's point, we may find ourselves living longer and that kind of thing, which I firmly believe in. If you haven't entertained yourself and listened to some of those podcasts about what's coming around the corner with human health and stuff like that, I'm convinced that's going to happen. But again, not nearly to the degree that people were talking about 10 years ago in terms of the demand curve. So the North American producer really finds themselves squeezed in that type of situation. So tonight we're going to talk about we could talk about a lot more, but in the spirit of time, we're going to keep it at four here. The economic threats that we see coming at the farm here in the coming year. And again, in no particular order, we're going to talk about sort of the reality of our monetary policy and sort of where we find ourselves monetarily, and a little bit more specific as to what that means to input inflation. The fact that land, I think everybody who's ever been in ag, and I'm sure the audience here knows that good productive agricultural land is a solid hedge against inflation. I think it used to be one of those pretty well kept secrets with the occasional outside investor participating, but it's a lot more mainstream now, and that's creating, I think, a little bit of asymmetry in land price, rent price, stickiness of rents, and that kind of thing, which we'll get into. Uh, Anybody remotely paying attention knows what's going on with the tariff situation and how that can create a little bit of an unreliable brand. Obviously we're not pointing fingers remotely at the U.S. ag sector. It's more just sort of how we are as a country. participating in this due to legislation and other things. And then we'll talk a little bit more about the realities of that flattening demand, some of the data around it, and with the other side of it, you folks are getting really, really, really good at producing a hell of a lot of grain very efficiently.
I think just throw one thing out. We've got the four challenges that we picked out. If you stay with us to the end, we're going to talk about, a whole list of things that we're seeing our top farms that we interact with do in this situation. We talk about this situation with them, and it's not like we have to sit back here as farmers and take this. There are things we can do. We're just going to talk about the list because I don't think these are going to be tough conversations here in the middle. But we're not going to sit back and take this, right? There are things we can do on the farm gate to change the vector of the weather, I suppose. Go ahead, Mike.
So we're just gonna throw out some generic inflation data out there. For those of you who want to occasionally find something that's on your mind from like a legacy economic sense, Fred, which is so I don't know why they call it Fred, but the St. Louis Federal Reserve puts out lots of really, really, really good data. So you can search Fred and the topic you want, and a lot of this stuff gets spit out beautifully. And this is a consumer price index, and it's an annual number. It is not cumulative. That's important. And it sort of shows the cycles that we've gone through. I'm old enough to know that I had an 18% CD at one point with my lawn mowing money in the 80s. When you see that really big spike there in the middle of the graph, and some of the spikes we saw around COVID and since with all this money printing and other things that we did. And this is maybe just a personal opinion, and don't want to speak for Jeff, but I think he shares that the problem with CPI is it's never really kept an apples to apples metric of the basket of goods it measures. The folks in DC sort of switch that basket around or change the weightings of the basket, which I maybe do understand a little bit over time how consumption has changed, but it's really hard to get apples to apples out of this. I mean, it's directional. It's reflective maybe of rate of change, but there's all kinds of holes you can shoot in this. And one of the problems, as long as you don't eat or use any energy, this thing doesn't affect you. So I've always had a bit of a problem as to not putting those two things in there. And as a little bit of an economics nerd that I am, I get a little ticked off at times when the use of descriptors around inflation. Obviously, we all know what inflation is, but sometimes you'll hear, especially the political world, say inflation is going down. But really, it's disinflation. So the rate of change is going down. Inflation itself has not gone down. So if inflation was 3% one year and 2% the next year, inflation is still 2%. So it's not going down in that sense. In my book, the only way inflation goes down is with outright deflation. And if you look at this chart, there's only been a couple of rather unique events that have created that, post World War II situation, and then the peak of the great financial crisis in '08 and '09. So, again, just to lay out a little bit of context, when we talk inflation, there's a couple different ways to look at it. And the next slide is really where I think Jeff and I have always been a little bit of an outlier, but I think slowly but surely we're being proved right here. And this chart again coming from the St. Louis Fed also is from the 50s to now. That's as far back as it went. Though the monetary base is so low back then and so high now, the graph starts to look just silly, like a super flat line that looks like the axis at the bottom. So I guess they picked 55 to show that there's at least a little bit of space in there in the beginning. But there are a niche, but I think more increasing and definitely a legacy vocal group of economists and they often refer to as the Austrian school, that really feel the monetary base is 100% related to inflation, period, full stop. Now, that's on aggregate. That doesn't mean necessarily that bread goes up the same way as a house does, or a college education goes up the same way as a bushel of corn does. But it just says on aggregate, If you look at the inflation of all goods and services, it is 100% related to the amount of money circulating in the system. And it kind of makes sense if you think about it. If you had X amount of dollars in a Y-sized economy and you suddenly increased X 50%, those 50% more dollars would still be chasing that Y in the economy. So, um, again, we feel a little bit more comfortable in this camp of measuring inflation. And I think if you really think about, I don't remember exactly what the metric is, but during, I think 2020 and 2021, we printed something like 30-40% of all the dollars that have ever been created. So that money is still ping-ponging around in the system and marginally creating inflation on the aggregate. And one phrase we like to always throw out there is Milton Friedman, who was kind of an Austrian light economist, but he's very famous for saying inflation everywhere and always is a monetary phenomenon. Again, a couple of different ways to sort of theorize what's behind inflation and some of the actual numbers around inflation. Anything else, Jeff?
No, it's about, government money chasing dollars, right? And
Hmm.
and and effectively, if you're a farm, it's crowding you out of things like, the government's buying concrete, the government's buying steel, the government's, starts hiring hundreds of thousands of people in labor, right? They're effectively pushing the private sector out through spending. Now, there's other things they spend money on. Of course, one of the big things is going to be the national debt. Don't want to get too far down the weeds, only that printing money has always been known to drive inflation. It's kind of a hidden way to tax. And I know many of you follow like Argentina, when they couldn't collect taxes, they just printed money. And of course, it devalued the currency. And of course, it also hurt people without assets. So it hurt the poorest, the hardest. It's a flat tax. Inflation is a flat tax on everybody who consumes.
Yeah,
And
Jeff described it where, the size of looking at, you can look at lots of different governments, but look at ours in terms of the amount of debt and the amount of money that's floating around in and around government debt and government projects. And that kind of the actual phrase is fiscal dominance. And keep in mind, we were one vote away from another 7 trillion in debt if we had done Build Back Better, and that would have been absolutely competing against cement, steel, heavy equipment, energy, yada yada yada. So a couple of different ways to look at inflation and start to go down the road of the impacts and how it's more specifically affecting ag. Um, so. There are, further to this, again, we're talking about the big picture, the aggregate picture of inflation. There are some things that are getting a little sideways onto, ag and inflation. Again, all politics aside, the support payments that we've seen recently and are probably going to see again shortly, really it primarily function as a pass through, and they go heavy into the inputs. That money gets circulated right around, goes into inputs, goes to land and rent, goes into equipment, goes to, support these relatively high loan rates and all that sort of stuff. So if you, again, going back to monetary inflation, this is sort of, segment specific monetary inflation where those dollars are being injected into the system and hitting very specifically the consumptive things that a typical producer has to go. So again, a little bit um, asymmetrically is affecting the ag sector. Obviously, on the things that we're importing, there's all this yin and yang on tariffs, and it's country specific, and the equipment side, parts, all kinds of things, depending upon where it's coming from, and depending upon exactly what it is you're seeking is here and there creating a higher priced environment, or sometimes outright inability to get it or scarcity, shall we say, that's also increasing prices even if they're around. Um, uh, Subsidized crop insurance is one of those indirect ways that plays a major role in land rent and cropping decisions, and quite frankly, where people farm. If you follow us on X, Jeff had a really good point recently on how that's affected marginal ground in the U.S. and the cattle sector, sort of where those two things intersect, and again, creating some noise in what would be probably a little bit more natural economics of the use of that land, crops versus cattle today. And yeah, there, this last point is just sort of a market structure reality. There is a fair amount of oligopolistic structure in some of these industries. Definitely fertilizer is one of them. There's really only a handful of really big players here into the US, and maybe nitrogen aside, if you look at the more mineral fertilizers, there's really just a handful of origins that and a handful of players in those origins that are supplying most of what we use. So again, just another part of that squeeze. Let's not forget that, higher interest rates are another form of inflation. The cost of money, that's a cost too. And, depending upon your balance sheet, depending upon what things you're funding or chosen to fund this year or thinking of funding next year, we went from a relatively low interest rate environment, even leading into COVID, and then, post COVID, we were at least from a short-term interest rate perspective, we were in and around zero. But in that sort of 2021 to 2023 or four, interest rates, at least maybe not in total nominal numbers, but in the pace at which it went up about as fast as it ever has in history. So the cost, we don't sometimes think of money as a cost, but it's a huge part of a lot of balance sheets in a very capital intensive business like ag. Um, this one, you know, hits me a little bit, or I maybe with a little greater understanding because a lot of my overseas work with Cargill, especially on the nitrogen side, Russia, as one example, is an absolute massive legacy supplier of various forms of nitrate fertilizer. So is Iran. And again, those two have had a big bullseye on them for a lot of reasons, and inability for them to necessarily put all on the market that they could have. And remember, even though we might not be direct buyers of this stuff, this is a very fungible commodity that can move around, and it all adds up. It's kind of squeezing the water balloon analogy. So even though we might not get directly from those two, if their ability to supply the world has been reduced, it's going to put upward pressure on prices. And even the Chinese, on again, off again, do some fertilizer exports. I've actually been at some of those plants where they gasify coal into nitrogen fertilizers and ammonia and things like that. So, again, a couple of one-off disruptive type geopolitical events that have definitely put a little bit more of a floor under fertilizer prices. Um, we we were in a honeymoon period there in point three where in the heart of the early and again, I'll use the word again, kind of honeymoon period of the early fracking boom in the U.S. Nat gas was an afterthought. It was often a byproduct. It was often stranded. It was often, if you're only going to get access to a well for 3 or 4 years, do you build a pipeline or not? That kind of thing. Well, economics has a way of winning out, and if you look at other geopolitical events, going back to Russia, Europe has largely given up their ability to produce their own energy. So they've come to us and said, please, 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 provide us liquefied natural gas, which is now a massive, massive part of their nat gas balance. And that used to be coming primarily by pipeline from Russia. If you ever get the chance to go to southern Louisiana and the Sabine Pass area or in and around Corpus Christi, Texas, those new LNG plants are an absolute sight to see. But that's now a marginal bid under natural gas that wasn't before. And we correctly, also under the umbrella of being smart economically, started to build some of our own more nitrogen capacity here in the U.S. because of all this natural gas. Well, there's a lot more competitive bids under it because of LNG, and then this recent phenomenon of data center. And under data center, some of them are getting them in a classical way through a pipeline, but one very interesting way, and either credit or critique Mr. Musk on this. They cleverly figured out, at least in some states, that you don't even need approval for the utilization of that gas if you're using it at the wellhead. So they've put some of their data centers, I believe in Kentucky and Tennessee, right at the wellhead, no pipeline, straight out of the ground, right into the data center. So that nat gas is not going to see the light of day, other than its direct use in that. So there's just a lot more bids under natural gas that on the margin has probably increased the price of nitrogen fertilizers. And property taxes, Jeff, you own way more ground than I do. You should, yeah, you should talk about that
Yeah.
one.
Yeah. I mean, we had some high prices and in a state where we farm in a couple of states, but in Ohio, and we had 2 years ago, our property taxes rose 40% in a year. And that's, you know, not, it's just a formula driven kind of thing. And, there are a lot of states where that continues. And, not only is the government have an issue with spending and the ability to tax, right? The states have huge issues. And they're continuing to look for sources of tax revenue. And obviously, if you're renting land and the landlord gets a huge increase in property tax, the first person they turn around and look towards is the renter. We see that all the time. So it's hard to say no. You're going to have to eat normally the farmer, right? In this case, not the landowner. The farmer is going to take that hit. That's generally how it has been in a competitive rental market. So yeah, definitely flowing inflation into the farmland.
Yeah, and I vicariously farmed through Jeff and through the renters in the two small plots that I own in Minnesota, but it is in Minnesota and it's not too particularly far from the metro area here. So yes, I don't think I've ever had a year in the, let me think here, 15, 16 years that I've owned it, where my property tax went down. So yeah, it just seems to be a fact of life. So you see a lot of this in public discourse. Jeff and I are pretty active on X and Facebook, and you see a lot of this all the time. And why, if gold is up, why isn't corn up? Or if land is up so much, why isn't wheat up? That kind of thing. So and we'll get a little bit more into the weeds of that one. Part of it is our global competition. They're not seeing the same inflation necessarily as we are, because obviously we're tethered to the dollar. In a lot of these places, Argentina has been, although the peso is finally strengthening, in a historical sense, a very weak peso makes them more competitive. Just like the Brazilian real, there in Brazil, Ukrainian hryvnia is another one, Russian ruble for wheat. Their currencies have been on the margin depreciating and making them uh, more competitive from that perspective. And in those places, they're probably seeing better margin structures right now, so they're getting the price signal and the confidence to supply, respond, and increase production a little bit more clearly than we are in the moment.
Yeah, I
The
mean
real reason I think that answers the question at the header is number two. You know, Grains, again, going back to the credit to not just the global producer, but definitely the North American producer. Price signals and that kind of thing. Um, uh, you're really good at responding to them and often hit the market with a lot of supply accordingly. So, grains are not that particularly, what they refer to, elastic or inelastic supply. It's very elastic supply, very easy to respond. Wheat especially, wheat's so multi-origin. It's northern hemisphere, southern hemisphere. It's just it can have moments of scarcity due to weather circumstance or maybe a step change in demand, but they're just not nearly as scarce as other sorts of assets out there. We throw, especially gold. I mean, silver to a degree, but gold is definitely if you plot a gold chart and some sort of agricultural commodity, you will absolutely see what we're describing here over time that, or said another way, how many bushels of corn does an ounce of gold buy? You'll see that even in things like crude oil. I mean, crude oil at 50 something dollars right now, adjusted for inflation, is ridiculously low, but it speaks to their ability, the world's ability to produce and respond in supplying oil. So you're getting some assets that have greater scarcity, precious metals, Bitcoin, certain types of truly unique real estate. Think South Beach or whatever, or Singapore. and other unique assets like fine art and stuff like that are just going to hold their value a little bit better against commodities that are just greater and easier to supply. But that said, as Jeff already mentioned, productivity in the North American ag sector has been absolutely off the charts. So that is a natural reality, a natural offset to inflation because you're sort of constantly fighting that deflationary reality of producing more and more, and the technological adoption in the ag sector in terms of now, and I think the go forward is going to be comparably good, is about as high as any economic sector out there. So,
Yeah, so if you kind of think about it, if you're buying something, right, and you're producing it for sale, you can either, take that efficiency gain and pocket it, or you can use that to lower price and gain market share. And commodity world, right, on a global competitive business, that unfortunately a lot of that productivity just gets pushed down into, trying to grab market share and get volume. And that's just how a commodity marketplace works. And on the precious metal side, Bitcoin, like things, there's things that are scarce. And like I said, there are things, I know there was a lot of, hey, buy soft grains, it's a hedge against inflation. I think people have learned a hard lesson that that's not necessarily true. And of course, so you can see the squeeze develop. And we spent the first few slides saying we've got these core inflation on one side of us, and we can't inflate the commodity side. We're not. And clearly, you just say what's happening or what's the signals. Argentina produced the largest wheat crop ever since they've been keeping records
and
this
almost
year.
nobody talks about Argentina and wheat, and here we are.
Well, they used to until
Yeah.
the economy got so unstable, right? Policies and such. But they obviously have made a change in leadership and are probably back. Brazil's been adding 2 million plus acres a year. So they're not getting a signal that they're getting squeezed at the rate bar. Sometimes I have to take a step back in life and just say, all the noise is running around me. What's the market really doing? You could go to the market to get my questions answered, and the answer is it must be profitable in places like Indonesia to produce palm, or Brazil to continue to clear land, or Argentina as things get cleaned up. They're got their 13, 14 million acres they're going to bring back because finally it makes some sense. So, yeah, it's tough. We're going to have the honest conversation with you. We have a really hard conversations with our clients. It's tons of fun, to be honest with you, because you can say what you think to a client. It's not like corporate America. I'll just be laughing in the comparison, but we say what you think, and a lot of clients. In fact, I've never had a time when a client didn't appreciate us being open and honest about what we're up against, because we can't deal with it as farmers unless we lay it out, and that's what we're up against, and now what we do. Instead of complaining or trying to dive or putting the head in the sand, it's much better to confront it with the chin up and say, okay, now what we do. Go ahead, Mike. Oh, hey, before we go on the RGO crew here that's hosting, can you make sure that you're checking the chat? We cannot see the general chat. So let us know if there's anything coming across that. Okay.
There is one, Jeff, but as a screen share, I don't know if I want to. Have you seen it?
No, Sabo, can you see that?
No, I got your original one, Jeff. So far we're quiet. So,
Okay.
and make
Okay.
sure the chat's enabled too. Sometimes that isn't the case.
Yeah.
So again, Jeff, this one's you, man. Come
Yeah.
on, you're all over this
Well,
one.
I just lived it tonight. I got thoroughly knocked out of a online and auction just a few minutes before we started this. Um, Look, you usually the price of land, particular price of any asset, but land is some opinion on the value of its future cash flows, what it'll throw off. And a real simple way is it's land rent, but if you own the farm, you might mix in the value of farming above land rent. And the fact is that when you look at the margin structure, and I probably look out ahead, and we're going to talk about some other things. Land is trading more as a asset, as a hedge against inflation, right? So people are buying land not for its future cash flows, but for trying to hold value in case the currency gets debased. And of course, I've been around the world I was the head of Venezuela for a while. I got all kinds of horrible stories about what printing money and horrible financial management of a country does to the population and trying to feed them. which was our task every day. But they're just buying land not for its economic value, what it can produce, what cash flow it can generate. They're buying it to hold value because they're very concerned about the size of the debt and how they're going to get it paid off. And of course, one of the ways you pay that off is you print money. And remember the earlier slide about the amount of money that's floating around. This same phenomenon has put a solid bid under gold, silver, anything that's we think will hold value and inflate. And Mike said, of course, certain parts of other types of land, real estate are in there. It's just a pattern. So what we've got is instead of for a farmer, right, we want to buy land that will hopefully make some cash flow and make sense. I mean, I ran the numbers the other night, very simple numbers, and I said I would have to put 75% in equity down to make this deal I was looking at cash flow. So it's really, really hard at today's land values to make that sense. We're getting inflation in land that is not driven from farming. It's driven from its perceived value holding capability. And so what do we get? We get inflation in land. We see some very large land rents here, and they're getting very hard to squeeze down, right? We can't get them to normally probably by now. I think we had a farm tell me one year that if you have 3 bad years in a row, you might see land rents break. And we're just not seeing that. We're not seeing land rents break, and we're not seeing for sure not seeing land prices break, despite some people saying maybe there's being a spread between high quality and low quality land. But generally, I think I just read some numbers tonight, 2-3% increase so far here in 25. And obviously, we're seeing some big numbers this fall. I watched a really large number here on a not typical farm in Southwest Ohio. So that's
Yeah,
how we get this inflation that isn't connected to farming, and we're getting squeezed as a farm.
yeah.
Go ahead,
To your
Mike.
point, Jeff, me being me, back in not too far from one of my hometowns in central Kansas. I've wanting to further feed my hunting habit and occasionally look at ground around there that is, I want it to generate some kind of cash. So it's one of those things where maybe 70% of it's tillable, 30% is either woodsy or a creek or whatever. And yeah, as measured at least by the offer side for the 2+ years I've been looking, even in this, horrific price structure for like things like wheat and sorghum, which is core to the economic calculation there. Prices, at least again, has offered, have not changed one bit. So we aren't talking about Central Illinois here. So interesting dynamic. The cap, you want to talk about the cap rate? Keep building on that, Jeff, or?
Yeah, so we'll keep moving here quickly. Land is a store of value. So we used to say that, when we bought land, it would return 3 to 5%. So they call that the cap rate. And you got to really take taxes out of that. And today, I mean, we're getting cap rates that are under 1%. So that's kind of what you'd earn on your, return on total investment. And then, what's been promised to the investment community is, hey, over the last 25 years, farmland has gained an average of 6-7%. So your return is going to be 8%. And that's a really good return, without the risk that is in a stock market or something that's more volatile. So it provides some diversity. And that's been promised. And there's some things that are coming in around the corner that make me concerned, because, you get the law of big numbers. It's one thing for, $1,000 acre ground go up 5%, right? Versus, that's a $50 increase. And if it's 10,000, it's $500. Right. So you're getting into and that has to be compounded annually. So you're getting into the laws of some really big numbers. And I think maybe the investment community has been snowed a little bit. I don't know that that's even slowing down, but the cap rate seems to be dropping. You're going to need, if you buy farmland today, you've got to have some other source of outside cash flow. I just picked 50%. I said the deal I was looking at was 75%. Uh, if you rented the land out, you'd have enough to make the payment. So you can only really leverage 25% and actually make the payments. Rent is always sticky. It's one of those things that takes a long time. I think we talked about it a little bit, but one of the ways you think you can make more is just get bigger, right? You've got fixed costs on a farm. One of the biggest fixed costs people don't talk about is the farmer themselves, family living expense. And so if you can spread that out over more acres, right? So it keeps a lot of pressure on keeping land rented. And then even with these, the rates that have gone, I think land rents generally, I don't feel like they're getting higher, but I don't think they're backing off in general. I can't speak for
No.
every area. I know like the PNW has seen some Pacific Northwest. We do have a few clients out there that we do see some land rent or share crop rents dropping, but they've been in a slump for a little longer than the Midwest actually. So, you got to look at, you could be at 1% cap or you could be at a 4 or 5% treasury, which in theory is risk free, right? Your cap on land is more risky than a treasury. It's just facts. Okay.
This one, we throw out a little history on this too. When you go back to the go-go days of the grain business in the 70s, and as young merchants in Cargill in the 90s, Jeff and I used to hear all the war stories from the older guys about what an amazing business it was. Because really, the U.S. was more or less the lone major supplier of grains to just about everybody who was a major importer. Then all that changed when we embargoed the Soviets in '79. They were an enormous net buyer of grain from us, and that quickly went away. And here we are also today having not necessarily embargo talk, but a lot of saber rattling around things, and nonetheless they have long-term impacts. They create competition. They create other things that ultimately create a headwind for us, and I think we're feeling that definitely in soybeans and sorghum here in the U.S. today. The Soviets sort of took that and said, you know what, we got to get better at what we do. And some of their Eastern Bloc countries also picked up the pace and increased production. Very quietly, one of these things that a lot of the world doesn't know, it was the Japanese trading companies that really put South America in business around that time to say, if we're ever out of favor too, what do we do? So they created optionality by doing various things to get South American production more and more in business. Um, and now, China's doing the same thing in places like South America and elsewhere. I know with my time in Ukraine, before this current skirmish, there was a lot of Chinese running around thinking about various things. I know Kofco very specifically was they have a trading office in Kiev, and they were looking at ways to do something similar there in Ukraine. So creating some of these things where we go from all takers to occasional tariffs or embargoes can create a little bit of a scar on what we do, and create incentives elsewhere to basically create competition.
I mean, there's a long-term impact, and I think people are all talking about the short-term impact. Are we going to get a bridge payment, I guess is what they're calling it, of some sort? People are looking at that, but I'm more concerned about this brand reputation because it doesn't just affect China. I mean, if you threaten China, if somebody threatens your family, right? If you were supplied by one grocery store and all of a sudden they said, you either do what I say over here or I'm gonna, stop providing your family food, you're gonna go do something. And I think, as China is a nation, and there's a lot of Chinese history about famine in the country and changes of power, they're out actively making it happen. And, they're supporting particularly Brazil, but also Argentina as alternative supplier. And Brazil is more than happy to add 2 million acres a year. And so I'm very concerned about the long-term brand reputation of the U.S. And in the, being used as the pointy spear. We got a couple questions sitting in the chat. I think this is as good a time as grab them
Yeah,
as
let's hit
any.
them.
Yeah. So this is coming from Zach in Illinois. It says if landsards aren't getting their desired return from cash rent, do they think some will start sharecropping, take more risk to get potential returns? I can't speak for every area. We see very little sharecropping. There is some. Our our risk tracking software that we give to the clients has provisions for it, so we do see it. Money up front is a lot better than taking your chances. And a lot of these land holders, they're not even we're moving so far away from the farm generationally I just don't see a huge return to sharecropping and taking on
Yeah,
risk
you're
in
talking
order
to
to.
somebody's son in Seattle or something that knows
Yeah.
nothing of ag. So yeah, not in all cases, but in increasingly so. And the other question, Jeff?
Yeah, there's one more. It's a little longer. It's from Ben, and he's just saying that, a lot of wealth has been gained from inflation. I think there is a little clip floating around about from Milton Friedman about, that's been a great way for, to own your house and have debt against it and have inflation effectively pay away the debt. Um, yeah, it's a real question. I hear you. And we're getting kind of dark here, and I don't we're I promise we're almost to the light. But look, we're just taking it on, and there'll always be opportunities for good farms. And don't get me wrong, people who, there is no better place in the world. And Mike and I have traveled all over the world to everything from Norwegian salmon farms to French wheat farms to Mike spent how many months in Papua New Guinea looking at palm plantations. There's no better place to farm. We have rule of law here. We have ownership. We have some security. We have tons of freight advantages. I mean, this is a great place to farm.
World-class infrastructure.
Um, U.S., Canada, North America. They're the great farmers here, and they enjoy a lot of things that the rest of the world is envious with. The U.S. farmers will figure it out. I struggle probably most with the land value today as myself, but we are getting better. I look at how much better our farm has gotten in the last 5 years, and I feel like I'm not going to say it's going to continue at that pace, but we've really made some progress, and I'm excited to see those next chapters. Or I have a son and a daughter probably that could come back into an operation someday, and I'm optimistic on what they're going to be able to do because we still do live in the land of the free, home of the brave. Include my Canadian friends if you're on here. It's nothing personal. You're all very good farmers and have, you'll figure it out. Um, and the best farmers do. And so we obviously a lot of times encounter some of the most, you're all on here to learn something. That's not the average farm. And so the best farms that are learning and moving forward and trying to figure things out, they're gonna do well. And I'm sure you will too. Okay.
We like to throw
This is
this
a good one.
Mythbuster out there, invest in land, they're not making any more of it. And I know Jeff has said this many times, so I'll kind of let you finish the point.
Oh yeah, I mean, look, I mean, there's all kinds of ways. First off, it's not that, I mean, there is places in land that are tillable, very tillable, that can be productive, and quite frankly, technology has made a lot of low productivity land uh, produce that people never thought they could. I know we grow some
Yeah.
tremendous crops on low productive land. You're still clearing land in droves in Brazil, in Argentina, and we're not talking about ripping the rainforest down, right? We're talking a lot of it was cattle ground. And then you've got places like Indonesia and Malaysia where I did a lot of work. We bought copious amounts of palm oil and various derivatives. Um, there's lots of islands there, and you get something. I think it's approaching 14 to 1 now, oil per acre from a palm plantation, than you do a soybean acre. So it's a very interesting way to capture sunlight, turn it into a high, put it into that battery, and right and harvest that oil. And so there is effectively land being made out there and productivity also on the land that already exists. And so this is absolutely a myth. It definitely, every time I go to an auction, I hear this statement. The auctioneer cracks that thing and says, you know, right before he smacks the gavel, he's like, they're not making any more of it on down the line. We got a question from Eric here. It says another form of ag land, but any thoughts on investing in the elevator business, given the pricing of the big three, corn, beans, and wheat? Eric, I got to table that one. The elevator business is super competitive. Mike and I are from that. It's a very low margin business. And in fact, they actually make more money. We talked about in class last night with the class. They actually, the big, I don't know, the ABCDs make more money when prices are higher. It's absolute fact. We've seen it from behind the scenes. They do better when farmers are doing better. I'm not just making that stuff. I don't work for any of them anymore. But I do know, when grain's moving through the system, freight is worth more. That they own a ton of freight. Farmers aren't as hard on margins. It used to be, Cargill owned the what is now Mosaic, so fertilizer pricing was better. Everything is better for the elevator business when the farmers are making money. It's very hard to make any money. Talk about inflation, and you'll see me out on X getting into it. The cost of bins is so high, you can't afford to build them if you're just going to store grain. It just isn't paying anymore. And so we've talked a lot about alternatives to storage. So lots of other alternatives out there, and there are lots of good investments. And I think we touch on that here towards the end. So good question. Thanks, Eric.
This one's a sore spot a little bit for Jeff and I because we always used to have one-off conversations about what just had a bit of a life of its own in 2009 that, and I'm sure all of you have either seen it in some way or heard somebody mention it, that there was going to be, X billion people by 2050. And I think the outright declaration that we're going to have to double food production by that time. And that was the error bars on that study were off the chart, and it was dead wrong about 2 years in, and it's only gotten more wrong today. In general, population is flatlining. We're not going to need to be at that same level of production that was thrown out by that. Not that it isn't going to increase for the reasons we described and will repeat again, but that was a little bit hyperbolic. But the fact of the matter is especially in the developed world and especially in a lot of our main export outlets, you're starting to see population either outright decrease, like you're seeing in China, Japan, Korea, and starting to really flatten out in countries like Indonesia, and maybe some other countries in Southeast Asia that used to have 6, 8 kids in a family, and now they're just absolutely gone down to like two or 1 3/4 on average in the case of a generation. So we are definitely flattening out in terms of mouths to feed around the world. Not necessarily the nature of the food we're producing and that kind of thing, which we have talked about and we'll talk about again, but in terms of headcount, it's not nearly what was being prognosticated, 10 plus years ago. And this speaks to it a little bit. Most figures you look at say we have about 8.3 billion people in the world right now, plus minus. That silly UN report had it at 11.2 billion by 2050. They've subsequently revised it to 10.4. It's kind of like when you've made a really bad decision or throw something out really really bad, you kind of try to stick with it and rephrase the time frame, or reshape the time frame. How they got to that number, and how do they randomly pick 2086? I don't know. I literally got that straight off the UN's site this morning. So some of the more pure play demographic analyses are having it around between 9.2 and 9.5 by 2050. But the fact of the matter is we don't know. We just know that the trend is lower. People get more urban, people get a little more wealthy. Ironically, they often have less kids, and that's been the trend of the world now for quite some time. So we threw this one out there just as two kind of big pictures things and the takeaway is, and if you believe most analyses, China peaked out about 2 or 3 years ago in population, and is starting to decline. The replacement rate per couple is around 2.2, 2.3, I think, just to maintain. And I think, obviously the one child policy in China and then now begging to have more than one kid is only kind of making a teensy weensy bit of a rebound. So China has not been producing at that level. All the while, if you look at soybean acres, specifically soybean acres, in Brazil, they show no signs of slowing. And just maybe pick a number, 95-ish million acres in 2020, and we're projected to have upwards 25 million more acres this year than we had in 2020. So
That's I just think of
that's an astounding figure.
that's an astounding figure when you think about what it takes to clear, I don't care what kind of land, and convert it to farming. It's just I think about these, D10 bulldozers with battleship chains hooked in there. They're going across there and pulling these trees out, and just it's an amazing terraforming feat. And obviously, it pays. People wouldn't do it if they didn't. Of course, it's at a different time, right? There's some huge outside farming entities that are there pouring capital into it, including Chinese, but including big investments, including U.S. investments um, in there that are supporting the capital needed to make these huge operations and clear this much land. It's absolutely phenomenal. I have flown over it. I've been to Sao Paulo many times, but it's one of these days I'd like to go see it on the ground. When you fly over it, you'll see fields as far as you can see from the plane. It's amazing. So not, be respectful. I mean, and the other thing I find, because we do have some Brazilian colleagues around, is, because of things like the internet and, high speed connectivity, um, they have precision planting there. They have GPS. They have a lot of the technology. It just gets places around the world faster. And so you got to respect the trading savvy of the Chinese, and you got to respect the ability to produce in huge volumes in challenging circumstances in Brazil. Okay.
All right,
This
Jeff,
is
be
my
positive,
slide
buddy.
because I finished this thing and I'm like, God, I'm sad when I did this deck, and I'm like, no, 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 we're gonna do things. There are things. These are things that we see the top 10% of farms doing, and I think that might go back a little bit to Erica's. So selling underutilized assets. So we got a little bit sloppy, I think, around the balance sheet of, let's keep an extra tractor, let's keep this, that, maybe we'll use this again, and making sure that we're getting a return on the things we're using. And I realize it's not a great time to sell a lot of this stuff, but it costs money to have it there every year. You got to expect a return and get that cash out there working, from it and working on it. This one, I do see a little bit of this, but I think everybody has to have our best farms are getting real. And when margins are wide, you can go a little further, right? You don't have to be exact. You can rent that marginal piece of land. You'll find out that, there's a reason that one was cheap. It's one thing, when you're renting a piece of land and you'll say, I'll spread my cost out. But, when you can't cover your variable cost, so it's negative cash flow. Yeah, I always say it's like putting, full sheets of $100 bills out in the farmyard and setting them on fire. I think that needs to be done. And not only that, and I have this problem of my own, there's some spots in farms, in fields that we probably shouldn't have been farming if we could figure out a way not to farm them correctly, because they're actually we're going backwards. We see a lot of non-correlated income, so off farm. It's been going on for many, many years. Obviously, families can do that, farms can do that. They're getting to other things that provide some type of base income. And of course, one of the big inflation things we didn't talk about is healthcare, right? And the value of having somebody that can, work on getting that healthcare. We're seeing a fair amount of specialty in all kinds of farms, and it's not like the whole farm, because they do take a lot more time and a lot more management. But we definitely see some move out of the commodity side and to figure out what's the right specialty mix. And there are a number of opportunities out there that can be done on farms. We see some real interesting contracts come across our desk that we go through and help think out and or help send back and get corrected or get a better position for a grower. Um, this one is that Mike was floored. I know Mike doesn't come from that, but when we do business, for the major, and Mike and I worked in this M&A shop, and we also did a lot of project work. We wanted another fructose line or something. We would look at it individually on return on investment, and we find out what the banks are doing is saying, well, can your farm handle the note? They don't care whether the project returns high. All they care about is whether they think you can pay it back. And I think scrutinizing of what I'm going to invest in has to pay back it in itself and has a cash flow. I think that's a good step, and we do see that with some clients. Whether you like it or not, they're maximizing government grants, whether that's around cover crops or we've got some friends that are getting their strip till rigs paid for. It depends upon where you are. I mean, it's just I don't make the rules, but I got to play by them, and our competitors will. We see a lot more investment in smaller projects with very high returns. We like to think that our class is that low investment, super high return, but I know I was working with a farm, maybe even beyond here tonight, that's they put in pits. So they put in full semi-load pits, and they were made able to go down a driver and a truck during harvest. They changed the grain carts out to get a little bit bigger so they could load full truck. There were certain things done on productivity, which gives us that last one. They're investing in things that can have clear productivity gains. And so, it's not, we're taking away some of those big investments and really turning them into, working on those are very high return investments that might be smaller. So there's absolutely all kinds of things being done out there to get ready, to succeed in a tighter margin environment. We got another one in the chat right now. It says, would you say that taking 60 feet along a trading line on a select farm that never makes many bushels and putting them into a grass crop would fit to point two? We see that. It just depends upon where you are and where you farm. It's awfully pretty hard to do that when you have to pay $550 an acre for that piece of ground. But I also tell people no one donates more to the wildlife fund than me on my outside rows. So yeah, we do see some of that. They put them in a grass crop or something like that. It's hard to make a grass crop along trees too, but yeah, there's just low return parts of fields that just the basic fertilizer spray seed you're putting into it, you're not even getting that back out of it. And so it's just a scrutinizing of yourself, and it's not easy to do, but hey, when margins are good, you can go and farm a marginal piece of ground. And right now margins are tight, and we got to just go back and check whether it's a marginal farm or a marginal piece of a farm. Okay. Mike, you want to take this one?
Yeah, we normally in episodes 1 to 3 talked about our winter master class. That is now we're into class 5 and we'll have class 6 tomorrow night. So we're well past the sign up there. We are chock a block full. We are having a great time, and big chunk of students both here in the U.S. and in Canada. But want to put in your ear about our 1 day clinic that we'll be doing together with Hefty at the Morton Center in Baltic, South Dakota. You can watch it recorded, or you can come and be there. We'll caffeinate you and feed you. And also have the recordings available for about a week after if you want to watch it again or check it out with other members of your crew. So it's right there on our middle of our homepage there on agrisacademy.com, both to sign up or just to click it and kind of get an idea of what it is we're teaching. It's kind of the greatest hits of what we teach, but in obviously a lot less depth within the reality of 1 day. So.
Yeah, it's a 1 day class. We go at it 5, 6 hours. We're at the Morton Center there, right outside of Baltic. A lot of events are hosted there during the winter. Real big thanks to Hefties for giving us the facility and promoting education. And it's fun. We did it last year. We had a nice crowd. We think the crowd will be bigger this year, both in person. You can watch live online. You can ask questions online as we go. And yeah, it's a full day, and get ready to, it'll change the way you farm. That's for sure.
Yeah, even though we talked about it being brief, you will definitely get a lot out of that.
Yeah. So, okay.
All right, Miguel.
All right. Well, I want to take the time here to wrap up and thank everyone for attending, and certainly a personal thanks to Mike and Jeff with Agris Academy for hosting this 4-part webinar series. As always, everyone here that attended here, we will email out a recording of this here so you can take a look at it if you want to share it amongst your friends, or if you want to take a look at it again. And of course, all of us are available to answer any questions you might have or do a deeper dive if you'd like to talk to me about futures and options. I'm available also here at RJO Futures StoneX. We do offer Farmer Direct programs, which is cash side. So we can talk about HTAs, things like that, if there's any interest. We also have a livestock swap offering as well here. So, and of course, if you're interested in learning more about Agris Academy, please reach out to Jeff and Mike. We also, we're going to be putting together here another series. So stay tuned, check your email. We will send that out. It probably won't happen here for a couple of months as they're wrapped up here with the class, but we are looking to put together some additional educational content like this from the feedback that we've received. And that's part of our real goal here between the partnership that we have with with StoneX and Agris Academy is to work to help educate you producers, give you useful information so that you can make confident decisions about your farming operations here. So appreciate everyone's time, and that's all that we have here for this evening.
Thanks, everyone.
Yep.
Thank you.
Thanks, everyone.